The second budget of this Labour government will doubtless dominate the headlines in the coming week. Even if there's a fair chance that much of it will be leaked beforehand, investors will still note the response of the stock, gilt and currency markets with interest, and no doubt Chancellor Rachel Reeves will view a quiet day and calm aftermath as a result, even if no government surely wishes to think it is, or is seen to be, at the mercy of the markets. For those who wish to eschew politics and stick to a bottom-up rather than a top-down perspective, we do have a lengthy slate of scheduled corporate news to look forward to as well. Names which may be worthy of further research include the following, either for what they say about the economy, their target industry, or indeed themselves. On Tuesday the 25th, we have Compass, Intertek, Beazley, Marston's, Renew, Cranswick, Breakability and GB Group. On Wednesday the 26th, Johnson Matthey, Hill & Smith, Pets at Home and Helical on Budget Day. And then Pennon, Halfords, VP and Safestore on the 27th. But three sets of results on the 25th may just write more headlines than most. All three companies face the consumer in different ways, and they're easyJet, Telecom Plus and Kingfisher. Now, easyJet shares are no higher than they were in early 2020, despite a huge recovery from the dark days of COVID, lockdowns and travel bans. And in fact, the shares stand at barely a third of the all-time high reached in 2018. When it comes to these full-year figures to the end of September and any guidance for the new fiscal year, analysts will study key performance indicators, including capacity and growth in available seat kilometres, or ASK, revenue per ASK, or RASK, and pricing and ancillary sales will be particularly important here, changes in fuel and non-fuel costs, and also the performance of easyJet Holidays, where Chief Executive Kenton Jarvis has previously stated estimates to more than $235 million for the year just ended. And analysts will also look to forward bookings for the year ahead. Add up all of that lot, and accounting for the trouble caused by summer's French air traffic control strikes, and analysts are looking for a headline pre-tax profit figure of £650 million in the year just ended, and £740 million in the year just begun. Both would represent a new all-time high for profits if achieved. Now watch out also for new aircraft delivery schedules, cash returns to shareholders, and also any comment on summer's unconfirmed and ultimately unsubstantiated bid rumours. On the dividend front, analysts are looking for 13.3 pence a share, up from 12.1p for fiscal 2025. Now, after a steady fall for much of the year, Telecom Plus shares are broadly unchanged over the past 12 months, even as the multi-utility provider continues to add customers, grow profits, and increase its dividend. After a solid-looking trading update back in August, Chief Executive Stuart Burnett will again be looking to reassure with these first-half results that the company is on track to meet its full-year guidance, namely customer growth of 25%, including those migrated over from TalkTalk, compared to last year's total of 1.1 million, an adjusted pre-tax profit at the midpoint of the range around £135 million, and that's up from £126 million a year ago. By the way, 1 year ago, Telecom Plus had 1.1 million customers across its energy, mobile, insurance and broadband services, as it recorded sales of 698 million and pre-tax profit of £46 million at this stage. The company also paid an interim dividend of 37p a share. Analysts expect an 8% hike in the full-year dividend payment, so that growth seems a fair benchmark for these first-half figures. Watch out also for any update on the company's long-term goal of driving towards more than 2 million customers. Shares in Kingfisher have enjoyed, if that's the right word, a roller coaster ride over the past 5 years, but they're now no higher than they were in late 2020, even after a good run in the second half of this year. The FTSE 100 firms' brands in the UK are B&Q and Screwfix, and their Castorama and Brico Depot in France. The end of the lockdown DIY boom, soft patches in the UK economy, and a difficult environment in France have all been potential drags, while a group-wide efficiency programme, asset disposals, and ongoing share buyback programmes have been helpful for sentiment towards the stock. September's first half results saw Chief Executive Thierry Garnier move profit guidance towards the top end of the £480 to £540 million range, and increase guidance for free cash flow to between £480 and £520 million. Analysts and shareholders will look for updates on both of these ranges alongside this third quarter trading update, as well as look for detail on the trends in like-for-like sales growth, both at group level and also across Kingfisher's key target markets of the UK and Ireland, France and Poland. Sales grew on a like-for-like basis by 1.8% in the first quarter, 0.7% in the second, and analysts are looking for 0.2% in this, the third period of the year, to January 2026. As this is just a quarterly update, Kingfisher is unlikely to talk about dividends, but the firm continues to run a £300 million share buyback scheme, which it expects to conclude next spring. Thank you for watching. I hope that you and your families are all keeping well, and I look forward to seeing you again next time.